Welcome to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. Today is December 15th, and in today's video, I wanted to finish the thought that I started yesterday. And yesterday's video had to do with the concept of the viewer needs to be super cautious and very mindful of who the person is that they're watching and getting their reverse mortgage advice, because I likened YouTube to the Wild West, where anybody who could put up a video about reverse mortgages and put in their 2 cents worth seems to have done it, regardless of what their educational background is, regardless of the fact that they're not licensed, regardless of the fact that they've never originated a mortgage. Despite all of these factors, they put up videos on this topic, and my concern is simply the fact that when the viewer listens to information which is inherently incorrect, then they're going to have the wrong opinion and wrong impression, and maybe take the path of taking no action to benefit themselves when it comes to the reverse mortgage. And the echo chamber of these YouTube channels that I've seen talking about reverse mortgages seems to come back to the same 4 points, which is it's too expensive, you're going to lose your home, you're going to be off title, and there's going to be no equity left on this property after you get a reverse mortgage. And if you watch some of the videos that I've done, and I've gone to each topic, some as much as 1 hour from just one aspect, then clearly that's not the case. So when I see a video like I saw today from someone that promised to explain to me the concept of a reverse mortgage, its pros and its cons, in 9 minutes and 25 seconds, I was like, boy, I have to watch this, because I love to know everything that there is to know about reverse mortgages in 9 minutes and 25 seconds. And what I came away with, and the reason I'm talking about it today, is that it seems to fit perfectly to what I was explaining yesterday. And this person styles themselves as a real estate investor, a realtor, and a hard money lender. Now, what a hard money lender is that basically a lender of last resort. It's the most expensive loan that you can get, typically for a short period of time. So whatever the interest rate is on a program, you could imagine between 6 to 8% higher than what the going interest rate is. And as far as the costs go, between 6 to 10% of the loan amount to get the loan. So here's the person's take and the conversation that on their video they have, and their talking points about reverse mortgages. Now, I wrote them down because I didn't want to miss any of them. And the reason I'm bringing it up is because if someone who saw this video and took the information that was given as correct, as factual, their impression of whether their ability or the benefit for them to get the reverse mortgage would be completely off. And then at that point, it doesn't really matter how many videos I have in terms of talking about the importance and the benefit, the features, and the things that can help a senior in getting a reverse mortgage to help them during their retirement. So I wrote down some of the conversation points that this person put down. And the starting point was that you could borrow 70 to 80% of your equity, which is false. I've done a video about the difference between a traditional mortgage and a reverse mortgage, and the qualifications that go into determining both. And the first thing I noticed and mentioned is the fact that if you're thinking that you're going to get a traditional mortgage and that you're going to qualify for it, even though you have a ton of equity, you're not going to be able to do so, because despite your equity, you don't have the sufficient income to be able to qualify for a mortgage. So this person seems to think that you could borrow 70 to 80% of your reverse mortgage equity from the get-go, which is false. The second point the person made is that your credit score determines the interest rate on the reverse mortgage, which is absolutely false. Reverse mortgages have nothing to do with your credit score. Traditional mortgages have everything to do with your credit score. And in my videos, I've discussed what the qualification for a reverse mortgage is, and your credit score has nothing to do with it. The home has to be sold to repay the loan. I'm assuming that this person is talking about when the senior passes away or permanently moves out. Well, the answer is selling the home is one option, but it's not the only option. The adult children could come, refinance the house, pay the bank, and then keep the house. There is no absolute requirement where you have to sell the property. So this is false. The lender loses money in case the borrower lives a long time. This is a scenario where I'm assuming the person is talking about if the senior can live in the property for an extended period of time and the real estate market goes down and the loan becomes upside down, the lender loses money. False. The whole reason that the mortgage insurance premium is required and purchased up front, and that's the biggest ticket item in getting a reverse mortgage, is simply in this exact scenario where if the property value declines and the loan amount goes up, the lender is protected. In fact, not only is the lender protected, but the borrower and their estate are protected because there's going to be no deficiency judgment against the borrower or their estate. So this statement is false. You have to get the money in a lump sum, and that's how you accrue massive negative amortization. Absolutely false. The majority of people who get a reverse mortgage that can qualify to also get a line of credit choose to let that line of credit stand in place and accrue over time because they don't need to take all the money. The only scenario where you take a lump sum money is that if you have a balance on your existing mortgage and you pay that balance off, you've replaced one mortgage with another mortgage. But otherwise, several examples that I've given is that there's three types of borrowers. One borrower has the property free and clear, and if they have the property free and clear, all they're doing is they're getting a standby line of credit to have in case they need it. So they haven't tapped into it. So there is no lump sum payment. You have to go somewhere to get some sort of a required counseling, like you have to travel. The counseling that is being referred to is that FHA requires counseling for both borrowers that are going to be on the loan so that a third party can ensure and make certain that the borrower is aware of their obligations as it relates to a reverse mortgage, which is the same obligation that you would have in a traditional mortgage and even if you had no mortgage. And that's basically what? To pay property taxes timely, have homeowners insurance. If you have a condo association, make sure you have the payments paid on time and upkeep of the property. That's what the required counseling is. Equity of the home will be depleted and no inheritance left. Again, this is one of those 4 points that I have said people seem to just have in their echo chamber and they go into their back pocket and pull out and they immediately go to, which is the reverse mortgage is an equity stripper and automatically there's no money left as soon as you get a reverse mortgage. And again, if you watch several of my videos, I've done nothing but exclusively devote the video to this topic. And again, we have to talk about which of the three types of borrower you are, how old you are when you get the reverse mortgage, what is your loan to value ratio when you start, and how much of the equity of the property is left to you as far as availability. But if you start off thinking that 70 to 80% from the get-go of the reverse mortgage is made available to you, of course you're going to think that there's going to be no equity left for you. So the best alternatives that this person has in terms of suggestions to getting a reverse mortgage, this is the takeaway. The best alternatives are instead to find an heir, someone that is going to be a future inheritance on your property, a child or a co-borrower, a friend. to be a co-borrower and for you to access your equity through the co-borrower. And that seems to be the best idea to a reverse mortgage. Now, the obvious factors to me when it comes to this kind of a mentality is that, so assuming that your co-borrower qualifies with you to get the mortgage, and assuming that they're willing to go and be obligated on a 30-year mortgage, and assuming that they can afford the finances of paying for their own mortgage and then coming in and helping out with your mortgage, because the whole reason you're doing a new mortgage is as a senior you have fixed monthly income and you're trying to access a portion of your equity. So now what's not said are these three concerns. Assuming all of these things that I just described does happen and you do get a co-borrower. What happens when the co-borrower decides that 2 years into this mortgage, they lost their job and they can't help make your monthly payment on your mortgage, and now you have a higher mortgage and you're on a fixed income and you can't pay this new higher amount and you can't refinance? Isn't that a prime person to be facing a foreclosure at that point? And now you have to pay back this person and deal with their situation that's on title. That's just one scenario. Another option is that person that is a co-borrower with you is sued. They get a judgment, and the judgment creditor now puts a lien on your property because this person is on title as a co-borrower, and all the judgment creditor is interested in is collecting on their money. And guess what? You have a prime property with a ton of equity, and this person who is your co-borrower is on title. So now where you are you in a better position or a worse position? Another factor that's not discussed. What if this person, the co-borrower's spouse, wants to divorce them and now drags you and your property into their divorce settlement and says, because my husband or my wife is on title to this person's property, they're entitled to half of that property because somebody has been making mortgage payments on this property for several years, and without getting technical and without giving legal advice and without getting legal, if I'm making payments on somebody else's property and my spouse wants to divorce me, the first thing she's going to say is that Benny has been using community assets, community income, to pay for his mom's property. And guess what? Because he's been paying on his mom's property with our community assets, with our community income, I should be entitled to half of that property. Now, have I done a favor for my mom by putting myself on that title and assuming that obligation and putting her at jeopardy? I don't think so. But none of these points seem to have been present when this person was giving this advice. And at no point is there a conversation around getting a standby line of credit so that in the future that standby line of credit could be something that the person can use, and there is no conversation about which of the borrowers you are and which would be suitable for you. I could go on this, but what I want to have to be the takeaway, which I alluded to yesterday and I'm stressing again today, is that unless and until you look at who the person is who's giving you the advice, what their credentials are, what their experience is, what their education is, what their licensing is, what their angle is, for you to take their advice is the absolute worst thing you can do. Because the one thing I do know is that 95% of these reverse mortgage videos that I see are done by people that are not qualified, not experienced, not licensed, not educated on the subject, and don't have the ability to fully go in and explore the topics that they're talking about from all different points of view. And I keep mentioning that unless and until you can view this topic, every topic around a reverse mortgage, whether it's the cost aspect that everybody objects to, which is it's very expensive. It's expensive because there's features and benefits to it. It's expensive because the things that come as a value proposition, if you don't have it, are going to be inherently harming you. And nobody seems to point out the fact that you don't have to spend $1 out of your pocket to pay for this mortgage insurance premium. When people are talking about equity stripping and there's no money left for you to leave as an inheritance, nobody's talking and breaking it down to explain how that works. So I'm again asking you, as the senior or the advisor or someone who's interested in this topic, because that's the only reason I can imagine you're watching it, is because you're looking for it from an educational point of view to benefit you or benefit someone you care about. If you come across these other videos and you walk away from it with the wrong impression, that's not where you stop. That's where you start, because you have access to the wealth of information on this topic from some really educated and established sources. The RICP program, that is the education that's given to financial advisors, is now a standalone designation and has been for the last 10 years. The amount of information that they're putting out is incredible. The amount of research done on the topic of getting a standby line of credit is incredible. So you don't have to now just listen to this information and view these videos and say, okay, this is what it is. Because clearly, I just only covered 7 points. And 7 of the 10 things that this person said were absolutely false. I hope that in the few weeks that we have left before my end of the month challenge of making 1 video a day, I can cover this topic again in 1 or 2 different fashions and bring its importance, because unless and until we discuss this and make it blatantly obvious, then all the other benefits that this program can provide is going to be dismissed. Thank you for being my client. I thank you for watching this video. I hope that it's able to persuade you that the importance of getting your information from the right educated, right source is of paramount importance. And I look forward to seeing you on the next video. Thank you.